Okay, I will go ahead and start. We are expecting some more folks, but we've got a lot of information to cover. And in the interest of time and everyone's wanting to get their questions answered, we'll go ahead and begin. I'm Tori Manis. I'm President and CEO of Child Care Group, and I want to thank you all for joining us for our second webinar on Child Care Relief Funds 101, all your questions answered. And that's exactly what we hope to do today. We are so grateful for the funding that's been made available to help every child care provider in Texas, but the deadline is approaching and we really want to be sure you know how to apply. I'm joined today by Doris Ramsey of Child Care Associates, Melanie Rubin of the North Texas Early Education Alliance, and our speaker, Gary Romano of Civitas Strategies. These webinars are brought to you today by Child Care Group, Child Care Associates, the Early Learning Alliance, the North Texas Early Education Alliance, and the workforce boards of Dallas, Tarrant County, the Heart of Texas, and Southeast Texas. First, I want to go over just a few housekeeping notes for you. First, everyone is going to be muted during the webinar today. And please, as mentioned before, please use the chat function, not the Q&A bar, but use the chat function to answer your questions, as it will be easier for us to keep track. If we're unable to answer your questions today, we'll provide information on how you can follow up to get more help. Also, the session today will be recorded. So if you have any questions or if you have colleagues who were not able to participate, you can go back and review the webinar later. At this time, I'd like to introduce our speaker, Gary Romano of Civitas Strategies Early Start. Gary, I'll turn it over to you for your comments and presentations. Thank you.
Great. Thank you, Tori. I'm glad to be here. As Tori mentioned, Gary Romano, Civitas Strategies Early Start. I'm the President and CEO. We are supporting a number of efforts with the Texas Workforce Commission in concert with some other partners throughout the state. One of the things that we're doing, which we're going to talk about today, is providing or helping to provide access to funding. And so in particular, we're going to be talking about three opportunities. One is the Child Care Relief Fund. Another is the FFCRA leave. I'll explain what that all means. And another is the Employee Retention Tax Credit. I'm also going to talk to you about how you can get help and the places you can get help. So as you have questions, to Tori's point, if there's something that comes up later, or if you feel maybe you need a little bit more clarification on how you could reach out to us and get some help with that. So let's start talking about the Child Care Relief Fund. So this is a program that is currently open in the state. The Child Care Relief Fund is federal money that is being distributed at the state level to help providers, child care providers, recover from COVID. So bring yourselves back from all the challenges you had as businesses throughout COVID so that you can continue to support families, to help children develop and make Texas a better place, and of course, help the economy come back as well. This specifically is a reimbursement. So this is a question that often comes up. People will say, is this a loan? Is it a grant? It's a reimbursement for costs that you have between January 1, 2021 and August 31, 2021. Those are the specific dates, because I know there's we recently found over the past 3 days that there's a rumor out there. There's two of them, and I'll address both of them. But one of the rumors is it goes all the way back to March. Fortunately, it doesn't. January 1 to August 31. In terms of eligibility, you had to be licensed by May 1 and open by June 18th. If you have a summer closure, I know many of you closed for the summer as a matter of course, that's all right. Or if you had like a 1 or 2 week closure during that time period because of COVID, that's all right too. But really what we're trying to target here, what TWC is trying to target here, are the providers that are up and open and supporting families by that time frame, that May to June time frame. Further, you can't be on a corrective or adverse action. I should also say, because I know this has come up more recently as well, you do need to stay open. So I know that's been a question because some providers who were teetering, unfortunately, have been closed. And so to access the funds, you do need to be open. This goes to Angela's question, which I'm going to now hit answer live. So the question you had, Angela, was how is total funding calculated, or you calculate it's a formula that everyone uses. 80% of the license capacity, the 75th percentile of the average local market rate. These are all public things. I'll explain how you could verify it because you had that question about, do I have the right amount? That's a fair question. Additionally, you get some funds if you're in what they call childcare desert. So those zip codes that have fewer childcare providers than others, we really want to make sure those providers make it through because those families desperately need you. So there's some additional money there. And also if you are Texas Rising Star certified or have a national accreditation. In terms of Angela's question about where you could find this, I'll give you the website in a few minutes. So don't worry if you don't write it down. But if you go to childcare.texas.gov, one of the things that we have on there is a calculator where you can calculate it yourself. Also, if you'd rather, I'm going to give you an email address later on. You could email that address with your operation number. We could look it up. It's important to know this total funding is a set aside because I know there's some people who have been worried. They said, I didn't get in immediately, right? Is there still going to be money? What TWC has done is they have used this formula to set aside funds for each provider. If you get it, great. If you don't, it goes back for other work, excuse me. So it is not like if Doris goes and gets her funds today that Melanie may not be able to get her funds tomorrow. Totally independent. Think of it like you almost have like your own little account, right? So please don't worry about that. And it's not that you don't want to apply swiftly and of course get the money, but just reducing one fear. So let's talk about how you actually apply through the process. And Sonia, I did see your question. I'm not ignoring you. We're going to get there. So step one, we recommend preparing. And this came up when we did this presentation, Thursday, right? There's been so many of them. We had talked about this preparation piece, and somebody had said, well, do I have to do it? You don't have to do it. We strongly recommend it because as you'll see when we talk about the end of the process, you're going to need evidence that, or at least proof that the money that you requested went to things that are eligible. So we recommend starting with doing that, right? Starting by pulling together your receipts and other proof of payment from January 1 through to the day that you are requesting funds, right? You can, as mentioned on the slides, you can also request funding for upcoming funds, right? So let's say Doris applies today and requests funds, and she has $15,000 allotted to her, and she knows she already identified 10,000, but let's say she has another 5,000 that she knows is coming up in August, or things that she wants to purchase. That is perfectly fine. You're still going to need the proof, right? And what I would say is make sure that you do follow up with that proof for those anticipated costs and that it matches the numbers. So, right, so we'll pick on Doris again. So let's say she tries to get that really nice play set for the back. She put aside $1,500 in August. She goes there, she lucks out. It's a big play set sale. Instead of $1,500, it's only $1,000. So Doris should then go and say, well, I've already taken the $500. I don't necessarily want to send it back to TWC. Can I find some other costs that I can use that $500 for? Absolutely, and you should. And if you need help, by the way, the email address, the website I'm going to give you all have resources on them that can help you with this and help you determine what is viable. You can even email us with questions. We get very specific questions today. I got one this morning about security cameras, for example, right? We hadn't even thought about that, but that's part of your operation in many cases. So you then want to go and apply online. The application process is pretty straightforward. So in this first step, what we're doing is we're verifying you are who you are, right? Now, a number of people have had some issues. So let me give you the big picture before we talk about some of those. The big picture is, very sadly, and this is a national issue, it's not a Texas issue, when you look at a lot of the money that was set aside during the pandemic, there's a fair amount of money that unfortunately was taken by people who were acting dishonestly and criminally. There was one report in the Wall Street Journal just about 3 weeks ago, great report that said up to 50% potentially of the dollars that went out for unemployment during the pandemic nationally went to crime syndicates. I mean, that's a crazy number. And so accordingly, TWC is taking a lot of steps to make sure that this money goes to you and not to somebody who it shouldn't go to. So the good news is they're taking those steps. They're protecting the funds for you. The bad news is sometimes those things create additional hoops for you because they're trying to make absolutely sure it's you and not somebody else. And there's sometimes extra kind of steps that people stumble over because of those additional precautions. So when you apply, you're going to get an invitation that comes just to you. And there's going to be 2 links on it. The first link is going to let you set up a user ID. We want you to set up a new user ID for this one. And the second one is going to then allow you to apply once you've set up that user ID. In this first piece, what's happening is you're verifying your identification and your information. Pro tip, it has to exactly match the CCR system. So if you have a question, go to the CCR system, especially when you have that word role. There's a lot of different roles out there, and I can tell you firsthand, many people may not know what their role is. So you can certainly ask us for help, but if you go to the CCR system, that'd be a great source for you. So in that first step, you're saying, does this all line up? You then submit that as your application, right? You will almost instantaneously, it's always within a few minutes, get a DocuSign. If you don't, check your spam. If it's not in your spam, email us, right? Very few DocuSigns have a problem, but I'm just bird dogging that one, right? But for most of you, it's going to come in, you're going to get your DocuSign. In the system, it's going to tell you that you were either pending or signed. Either way. Unfortunately, there's really not a difference between them. TWC is fielding a second one signed, which would allow them to differentiate when they've received your DocuSign. Now, we're still getting to the question of, so how do I get my money? So what happens at this point is, as you're pending or signed, TWC behind the scenes is reviewing every single one of these. And there's been thousands, but they want to, again, make sure that when it goes to Darice, it's going to Darice and it's not going to some crime syndicate in the Ukraine, right? So they want to make absolutely sure before a check goes out or anything else happens that it's going to the right person. So they're reviewing those. And then what happens is, and Sonia, here's the answer to your question, is in the meantime, you should be checking the status. If you go onto the website, and after the presentation, I'll give you the direct address, but you want to use the direct address. It's also in your invitation email, not the original one you got for your invite. Security precaution, right? But you'll want to use this direct email address. And what's going to happen is you'll log in, go under application list. You'll see your application. If you're doing it on your phone, pro tip, you're going to have to scroll all the way over to the end of that application. And then it will tell you. If you're in doubt, send us a screenshot. Screenshot Operation ID whenever you can. It's going to make it a lot easier for you. So in that case, Sonia, that's how you can sign up. I mean, sign in, and you can check your status on a regular basis. In terms of how long that process takes, which is I think your second question, Sonia, from when you apply to when you get approved can be a few weeks. And I'm just warning y'all, right? Again, there's been a great response, which is wonderful. The other thing you should know is this money is getting out faster than other states. I was on a call on Friday in New Jersey for some work we do there. States still figuring out what they're going to do. And I'm not saying that in a mean way, like, oh, bad New Jersey. But what I'm saying is, if you're a provider, one of the providers we work with in New Jersey, right now, there's nothing. Here in Texas, you're online to get some significant funding. So I'm not trying to say, so you'll have to wait, right? Everyone's moving as quickly as they can, but do know that this is part of what's happening is in the swiftness to get the money out to you. There is a number of steps that people are realizing along the way. So it's taking longer than we thought, but on the other hand, it's going to be out there sooner than others.
Gary, if I could just jump in right there and add to that,
Yeah.
we heard from TWC late this week that they think some of the grants will be able to be released by the end of next week. So they really are working as hard as they can. I mean, it's pretty overwhelming in the back end, just doing that verification and just really checking everything, but that's starting to move. So do be on the lookout. And I think that was really exciting and really great news. And before you jump on too, if you could also just address how providers report these funds. Do they report them as income for taxes, or if you can just address that issue?
Sure. So, and I didn't see that one up there. Okay. So in terms of reporting the funds as income, I mean, you know what, let me get through the end of the process first, and I'll get to it when I hit receive funding, which I do normally, and I think it'll make a lot more sense then.
Right, sorry.
So, no, it's okay. Don't be sorry. No. I want the questions. You know, I'm a big boy. I'll tell you if we need to hold off, but I'd rather we ask them than miss them. So the next step is, so to Melanie's point, right? TWC is working as fast as possible. So now Doris gets her approval. She logs back into the system. She goes to application list all the way over if she's on that phone, and there'll be a little link that says request funds. Then what pops up is just a single field. Pro tip, don't put anything else in there but numbers. So if Doris, we said earlier, she got $15,000, your instinct is going to be $15, 000.00. The system will say that's not a number. I know it's a number. I get it. But it's not for the system's reason, because again, the system's trying to protect things. The system just wants numbers. So she would do 15,000. That's it. She hits enter, right? Now, to Melanie's point, what'll happen is there'll be a thing that pops up that'll say that you've requested funds and that your date is pending. When it gets mailed to you, the date the check goes out will appear there. The funds should be to you within 21 days of your request. So if Doris, like some of you requested your funding, let's say on the July 2nd, well then by July 23rd, it should be there, right? And I think that answers Janet's question. I'm sorry I didn't record it for you, Janet, or for others. We'll have to type that in. But it should be within 21 days of your request. You should get a check. Again, you know, I know some of you want a bank transfer. This is, again, a fraud protection, right? It's a check, and it's going to go to your address of record on the CCR. So I know some people say, can you send it to my house instead? Fortunately, I can't. Again, fraud protection. So now you've received the money, right, in this final step. So first thing to know, and I'm going to get to Melanie's question second. First thing to know is, well, Gary, you told me about all those receipts. I haven't uploaded them yet. They're sitting in a big pile on my desk. What do I do with them? You hold on to them for now. CCA has the right to request proof of payment, right, in receipts, right, for those funds up to 3 years. And there will be some monitoring. So they will be selecting some providers to meet with and go over it, right? So that, you know, so you do need to hold on to them. You want to hold on to them. I always strongly recommend have some paper copies, you know, grab this sucker, take some photos, right? Just in case, right? You know, gosh forbid something were to happen. I'm a big fan of paper, but I'm also a big fan of digital. And then it's like, it's in the cloud and you're safer. To Melanie's point, you know, if we go back to the beginning of it, this is paying for costs. This is reimbursing you for costs, right? So if we go back and pick on Doris again, poor Doris, like you got up early on your Saturday, you're on video, and because you're the first one on my Brady Bunch grid, I keep picking on you. So we had said earlier, Doris had already identified $10,000 worth of costs. Then she was going to go for the play set and for some other stuff that was $5,000, right? That was upcoming. So those are easy reimbursements because she hadn't purchased them yet, right? But Melanie's question is really about those reimbursements in the past, right? So this is treated like any reimbursement tax-wise or accounting-wise, where you say I have a cost, I have money, they offset each other. The problem with the historical, as many of you will figure out pretty quickly, is Doris paid payroll back in January. So let's see, she paid $1,000 in payroll. Well, now she's attributing it to the fund. Okay, that's great. So her accounting shows we had 1,000 in payroll. We had 1,000 from the relief fund. That's even. But she did pay that money in the past. So now she actually kind of technically has an extra 1,000, right? That is taxable income. What I would say is this, and there's a piece on the website I'm going to share, childcare.texas.gov, that we put together that takes you through it. Take a close look at that piece if you're nervous about the taxes, because what you'll see mathematically is even if it bumps you up a bracket and we show you how it looks if it does, you're still making money off of it. Like there's still a net profit that's coming to you. So if you are nervous about the taxes, don't hesitate to ask us. Like I don't want to dismiss your concerns, but on the other hand, take a look at that document, take a look at the math around it, because it's still a good deal for you. Before we go on to the next one, let me see if I can just chug out a couple of these questions that we have. You've been approved and you've not received funding. Date, how long will we see before? Again, if you've been approved and you've requested the funds, make sure you log back in. Back to Sonia's question, you should be going back in there on a regular basis. TWC is going to send you an email when you're approved, but just in case, keep checking. And when you get that request funds from that date, it should be 21 days to when you have, at most, to when you have the check in your hand. My request amount says 0, but I don't remember just putting in only numbers. Taisha, do you give us an email on that one? I'm not sure. I'm 100% sure about what's going on there. Send your operation ID and a screenshot if you can. Those are going to make it a lot faster.
Gary, if you can also address
yeah.
how providers should have received an email to apply. How do they find the link to apply in the first place?
You should it's an email that will go to your email account of record, right? So there's another hint, because again, poor Doris. I love you, Doris. And this is why I feel like I can pick on you, right? Let's say Doris is like some of the providers we had. And, there was this email that she used 5 years ago. And then she stopped using it. She stopped using Yahoo. Now she's using Gmail, but she never changed it in the CCR because that's where the emails are coming from. So sometimes it's in that old email, right? So 2 ways to figure this out. 1 is go to the CCR and see what is on there. 2, if you email us your operation number, we can look it up for you. We can look up your eligibility, right? Not hard to do. We could even look up, as I mentioned earlier, the amount that's been allocated.
Then there's another question, Gary, that says, if they've received a DocuSign, but their application still says incomplete, if they've received the DocuSign, is it done, or do they need to pay attention to the incomplete?
They need to pay attention to the incomplete. It's not going to move forward till they clear that. The incompletes are very often related to the corporation type, which I know can be confusing for some people. So, very often, again, like a little hint, if you're a sole proprietor, if you have that Schedule C, 99% of the time you should be using sole owner. If you're a nonprofit, a for-profit, a C Corp, an S Corp, an LLC, Texas corporation, right? And what they're going to ask you for is your EIN, and they're also going to ask you for your TIN, which is your Texas version of your EIN. If you're not sure what that is, you have to go to the Secretary of State. There's a number you can call for the Secretary of State to get it. But if you have that incomplete, my gut would say it's likely related to a typo in one of those 2 numbers, because again, as the checks go out, before those checks go out, they have to make sure it's absolutely you, right? So definitely go in there, check the data that might be missing, update it, get it back in. You're going to get a new DocuSign, and then you'll be able to move forward.
And then, Gary, there's one more question about the role of the accountants. If they're monitored, can they direct the monitor to the accountant, or does communication need to be directly with the provider?
Well, that's a great question, because I'm stumped there. I don't know. I would have to talk to the monitoring group at the state. My guess is they would be agnostic about it and would be fine. I don't know that for a fact, so don't count on that. What I will tell you is TWC has committed to the fact that you can potentially meet with a coach on a pretest if you do get selected for monitoring. So in other words, they can go through some of your things with you. And by the way, even the monitor team, having spoken to them, have said, like, if they go through Doris's stuff and they say, oh, Doris, this really shouldn't have counted, they're going to give you a chance to find something else, right? Like, nobody wants you to have to give back this money. I mean, not like in a bad way. They know you need it, right? And so if it isn't this cost, there's another one that you've assumed. So please don't fear monitoring too much, like as in, you know, like the stereotypical movie where the IRS auditor is sitting down with you trying to figure out how to trip you up. This is much more about just making sure the funds are used in the way they're supposed to per the US government.
Great. And I'm sorry, there is one more question. If we use the money for reimbursement for salary, we cannot claim salary as a business deduction. Is that correct?
That is actually incorrect. So again, this is a reimbursement, right? So if Doris, will use that example again, she spent $2,000 in salary in January, she claims that. She also claims the $2,000 that came from TWC to pay for it. Now, again, that's going to create some excess funds for her because she paid for that months ago. That's a different thing. But in terms of just like any reimbursement, right, you can attribute the cost, the expense, you can attribute the revenue, and it offsets.
Great. And another good question is, are purchases for toys and supplies and shade structures allowable expenses?
It depends. Like, largely yes, right? Let me start off with the good news. Largely yes. The biggest prohibition on this funding, which comes from the federal government, I'm not trying to say like bad federal government or something. I'm just saying, like, don't blame TWC. This comes down. This is a national thing. Is there's a number of prohibitions around using the money for construction or permanent things. So for example, what we usually say of play structures is, if it's like one of those little, like little Tykes houses, the plastic ones that you can move all around, good to go. Let's say you have one with the spikes that you can move around, good to go. Now let's say you're talking about one of the really big ones where you have to have concrete footings and install them as a permanent fixture. No. Similar thing with shade structures. So we had somebody who had two options. One is they wanted to attach it to the side of their house as a permanent structure. That we can't do. But then they also said, but maybe I want to just get one of those ones that's kind of mobile, so I can put it in different places of the backyard. Good to go. The key thing is it has to be related to your childcare business. The other thing I would say about costs up front is always keep in mind, if you're a family care provider, time and space allocation, just like you do on your taxes, right? So personal use, things that you share with your business, such as your house, like meaning your rent, your mortgage, your utilities, you do need to calculate the percentage of business use. If you don't remember how to do that, or if you're like me and you use online tax software that just kind of magically does it for you, and you want to just break it down, I'm going to give you the website later. There's a guide, a step-by-step guide on it. Go to page 9, and we have like a simple worksheets that could take you all through it if you need to.
Great, thank you.
Melanie, should I jump on the Q&A ones real quick?
I think we've got you go ahead and I'll bring them to you.
Okay.
Sure.
Good morning from Kenosha. I applied and attempted to check the status. It says incomplete. Yeah. So this was the one we just talked about. Again, just to emphasize it, if you have an incomplete, please do go back in there, redo your data, update the pieces that need to be updated.
So the other questions are, how do they send in the receipts, or do they keep them for later, or how do they send in the receipts?
So as mentioned earlier, just currently the guidance is to hold on to those receipts. Now at a future date, whether it's a month from now, up to 3 years from now, TWC can ask to see them or have you upload them or whatever. Right now for this funding, they're not, right, for this part of the process. But do hold on to them because you may need them in the near future. You may need them if you're monitored. You may need them in the far future. And so definitely hold on to them. Yeah.
And can funds pay the employees 941?
So yeah, I saw this one. So the 941 question, so the 941 is a form that you're sending to the federal government, which reports how much you've spent. Actually, we're going to talk a lot about the 941 in a few minutes. which tells you how much you've spent on payroll and payroll taxes for the federal government. If you're saying, can it pay the employees for 941 to the IRS? I think what you're saying is, can it be used for employee taxes, like employer taxes? Yes, the employer side of the taxes, it can be used, right? So federal unemployment for Doris, we can put on there, right? If you're saying, can it be used, because there's another question comes up, as proof of payment? Likely yes, but I'd say a third-party payroll report, like from ADP or whatever, is a little bit better. We've already been verifying requested funds, and does all the receipts gathered have to be sent? Yeah, again, Jacqueline, they don't have to be sent right now, but do hold on to them, keep them handy, have them.
Then there's some more on allowable expenses. Is painting okay? And if so, if it's in the home, all over the home, or just the center area?
So, if it's all over the home, what I would say is follow the same guidelines that the IRS does, right? So if it's a common area or a business area, you'd use that time space allocation, right? If it's shared. So let's take 3 scenarios. Let's say there's a room that is 100% dedicated to the childcare business. Well, the paint in that room would be good to go, right? Now let's say there's a bedroom, which is perfectly legal, right? That you use for nap time. You put some of the kids in there so it's a little quieter. Well, you can claim that as part of your time space allocation, right? And so percentage should be to the business, but also a percentage is personal use, because otherwise you're using that bedroom, right? Now, let's say there's a totally different part of the house that you never use for childcare. Like, let's say the basement is never used for childcare and you paint that, that would just not be able to be included. So it's, again, the same rules as the IRS.
And what about classroom furniture?
Classroom furniture, good to go. If you're going to, again, keep in mind that construction thing. Sometimes people think cubbies. Cubbies might be, right? Because, we've had some people who said, can I put in cubbies? On the surface, that seems good. But then we also had one person who wanted to start remodeling the classroom. And then we start getting into the construction issues that are prohibited. I requested funds before I received my email that I could request funds. Is that okay? I think if I'm understanding it correctly, yes, it is. Because if it's gone through, yeah, I mean, if it's something where you said, I got the thumbs up before I could, before I received the invitation, you should be fine. But you should have had the invitation to apply for it. So that's kind of interesting. But, when in doubt, just shoot me an email with the status under application list and I could let you know.
And then Gary, before there's one more question back in the chat box from Angela about really wanting to review the amount that TWC came up with, but they've already signed the DocuSign. Should she email the email separately, or is that something you can address on the call?
I mean, no, I mean, if you feel like you have an incorrect amount, you should definitely email the email I'm going to share, which is texas@ecebizcoach.org. Don't worry about writing it down. Like we'll show it to you in a minute. Take a look at, at that email, send us, what your concerns are very specifically. I don't want to say no, I don't want to say yes, because it depends on the circumstances. We have had a handful, like, for example, the number of children is based on what you had on May 1. And we had a handful that had approvals right before May 1, right? Like literally like 48 hours ahead of time. And so that's something that they would then change and honor, right? But if, let's say it was May 2nd, then no, unfortunately it wouldn't. So because some people have said, oh, my numbers just went up. Unfortunately, they're, because they have to draw a line kind of somewhere to keep things moving forward. So when in doubt, send us the information. Claudia, send us the information on that remodel as well, because it depends on how extensive it is. Again, like, are you putting in new plumbing? Are you moving things around? Or is it, hey, we're replacing an old toilet? If it's the former, that kind of more serious remodel, likely out of bounds, changing the toilet, not an issue, but, let us know what it is more specifically and we can address it. I'm renting, my landlord mentioned they want to sell. Can I use the funds for down payment to purchase a property to continue our childcare services? We would really need to understand more about that one. You can use some of the funds, if like, let's say you're legally moving from one location to another, but I really want to understand the specifics of that and your business model. Outside equipment mobile is good. Yes, it is. Or to renovate my set by adding more rooms, again, that's out of bounds. Adding more rooms, definitely off the table. Again, as part of the federal regulations. Can use funds, curriculum. Yep, all of the above. Curriculum, tables, good to go. Can you revisit the guidelines? We have a center and would like to update our common areas in classroom, new paint and floors. New paint and floors, good. If you're a home-based provider and there are some shared rooms, use the time and space allocation. It's in the step-by-step guide. If you're a center, a lot easier, right? Because the entire business is dedicated 100% of the time to the purpose of the business. So that would be easier to attribute. What about plumbing in the childcare area? It needs to be replaced. Again, it depends on how extensive we're talking about with a replacement. And I hate to kind of split hairs. I just want to make sure nobody has a problem later on because, something gets, kicked back because it was too extensive. So if when in doubt, let us know. Again, with the center, can we purchase playground equipment? Again, yes. Awesome. Okay.
Nope, there's two more. Sanitization machine and vans. Can they pay off vans?
Sanitization machine, yes. Vans, maybe. So what I would say is when it comes to vehicles, if again, think about the IRS rules. If Doris has a corporation and the corporation owns the entire van and it is only used for business use and that is documented, then yes, right? If, let's say, Doris is using her own personal van to pick up some kids, we had somebody like this the other day. Use the same way you would with the IRS, right? Log your mileage, use the IRS rate, right? And then do a reimbursement off of that. We also got a question that said, can I just buy myself a new SUV? Right? Like if it's not owned by the business and you're not kind of following those rules, then unfortunately it would be out of bounds. Vincente, playground, yes, likely. Again, if it's a permanent structure that you're sinking into the ground, no. Can you use vacuum cleaner? Absolutely. Go get a new vacuum cleaner. Computer equipment, yes. And again, think about personal use if you're a home-based provider, but like, let's say Doris is a center, she can include tablets for the kids. She could include something for the director that could be used. Okay. So let me go on before we get too mired. Families First Coronavirus Relief Act. So this is the next one we want to talk about. So when you go back to spring of 2020, and this was all fresh and new for us, the coronavirus, one of the things the government realized, the federal government, was that small businesses, and they're defining small businesses, this is really important, as any enterprise that has 500 or fewer full-time employees. So if you have 499 or even 500 full-time employees, you're in this. If Doris is a home-based provider and it's just her, you're in this. So home-based providers, listen carefully, because I've yet to find a home-based provider, maybe, okay, that's not true, maybe one or two that we couldn't do this with because they weren't eligible. Almost every home-based provider has been impacted in a way by COVID with time off, where this has been applicable to them. And we've done some in Texas already. So the idea behind this is the federal government wanted to give you some money to help you ensure that you and your employees could have the time off you need for COVID illness, quarantine, caring for a family member with COVID, or if you needed to do home care or remote school, right? We're going to talk a little bit more about this. And it goes from March 2020, March 15th, 2020 to today, and continues through the end of the year. So what's the benefit? So this is the hardest part of this one, I promise you. There's two divisions, COVID quarantine or illness. You get up to $511 per day for COVID or quarantine. So this is based on your actual rate, right? So if Doris makes, 15 an hour, right? We would do 8 hours times 15. less than 511, we'd be able to attribute the full amount, right? If her amount went over 511, let's say she gets 600 a day, she would only be able to use 511. This can be used individually. So if Doris is a home-based provider and she had to quarantine for a week because of an exposure, right? Like we had a case like that where one of the families unfortunately had an exposure. And so the whole family care provider's operation had to close for 2 weeks in that case. It can also be used for a group. So again, let's say Doris has a center and same thing, had to close for 2 weeks. She could claim this as appropriate for her entire staff. And we've helped people do that as well. It pays up to 2/3 of your normal rate, up to $200 a day for caring for a relative with COVID. So if Doris, gosh forbid, had to care for her husband or something who got ill with COVID, it's a lower rate, but she can still get some money. The way you calculate the number of days you have, you get 2 working weeks, 10 days, from March 20 to March 2021. Think of it like your benefit where you might get a certain amount of vacation a year. From April 1, 2021 onward, you get another 2 weeks, so 10 days. You don't have to use them all at once, you can use them one at a time. If you're a center and you want to just claim them all, because you were closed for 2 weeks, good to go. These things, by the way, and I'm going to talk to you about how to do it. The reason why I'm talking about 2020 is because this and the employee retention tax credit are things that you can claim in the past. So if, let's say you say to me, gosh, Gary, we had a provider who was closed for a week, 2 weeks in November, right? This was just 2 weeks ago that she had mentioned this to us. Well, we can help you with the paperwork to get those 2 weeks back from November that are owed to you. So know that we can go historical, we can do it right now. We can also look at the future as things play out because this is available the rest of the year. The other, whoa, I have too many windows open trying to monitor for questions at the same time. The other benefit is for caring for a child out of school. So to be clear, this is the only tricky part with this one. It's for when your school would be regularly open. So in other words, unfortunately, the winter storms don't count. I truly wish they did. I know it was hard on a lot of families and businesses, but they don't. Vacation doesn't count, right? Like if Doris's kids are home for the holidays, she can't count that. But let's say, I'll pick on Tori for a little bit instead, just to mix it up. Tori's children couldn't be at school, so she had to close her business, or she kept paying one of her employees because they couldn't be at school because their center provider had to close for a while. Or let's say they had to do remote schooling, right? Like we had a provider who needed to take a number of months to do remote schooling and could not operate. She was not getting unemployment at the time. She could request this funding, and we helped her do it. It's 2/3 pay up to $200 a day. 2 other things to know about this. This is up to 10 weeks. That's up to 50 days of benefit. That's really significant if you had a bunch of time that you had to dedicate for homeschooling. This can also be intermittent. So for example, we had one provider who, family care provider, who every Friday was her day that she had to do remote school, so she couldn't be open on Fridays. We could do every one of those Fridays, up to 50 of them. And we did, right? And this could be really significant. Like we had a provider who, not that long ago that we were working with, who got $1,500 out of it for 2020. And we'll get more in 2021. Not a bad deal. I take $1,500, right? So how do you do this? 3 steps. 1, document your time and rate. If you're, a center provider, let's say Melanie has her center and she uses a third-party payroll company like ADP, this will be a lot easier. She would likely just code the people and say to ADP, yeah, Tori was on Families First leave from these dates. And then they would do all the documentation for you. Let's say, you're like Doris and you're a home-based provider, it's just you, right? You're going to want to write down, these were the days that I claimed for family care, for COVID quarantine, or whatever. Keep a record of them just in case. Next, alert the IRS. 2 ways you do it. If you are a center, if you have W-2 employees or a family care provider with W-2 employees, if it's for a W-2 employee, you're going to do it on your 941. See, I promised these would come back into play. So your 941 is your quarterly tax reporting to the US federal government. There is now actually a line on it for this, for emergency, for FFCRA emergency leave, as well as care. So if it's for the current quarter or future quarters, you can record it right on that 9041, right? But I've told you we can also do it in the past. So let's say, like I mentioned, that one provider had the 2 weeks off, they had to close their whole center in November. They would go back and do what they call a 941X, which is an amendment to your 941. It's very simple. However, no, most of you with W-2 employees have a payroll company. Gusto, Paychex, ADP, they'll all do this for you automatically. So don't panic. And if worse comes to worse, that you're one of the few, like we had one in Texas so far where they do their own 941s, we can help you with that. So free of charge, by the way, all this is free of charge, and I should emphasize that, underline it, English and Spanish capacity. So, you know, but what if you're that sole proprietor, right? Because I said you could apply too. You unfortunately have to do it through your annual taxes. So when you do your annual taxes, there's an opportunity to report, that's right, FFCRA leave and credits. If you've already done your taxes, if you've done them with an online program, there should be a button that will allow you to amend your taxes. You can do it right there. Again, you've documented the time and rates, you'll be able to fill that number in pretty quickly. If you're not sure of your rate, you're a sole proprietor, just have your hours handy. Your online system is going to do it for you. If you use a tax preparer, they'll usually understand fully how to do this. You can bring the information to them, same thing. If you need some help with it, ask us. For 2021 leave, keep it handy so you're ready. And by the way, on the website that I mentioned, you know, earlier, which we're going to show you again, there's actually a whole little short document on how this works, how to document it and everything. So if you get tripped up or you say, gosh, Gary, I didn't get to write this down, it's there too. Final point, and Claudia, I'll answer your question just a second when I do this part. You receive the money. So what happens is this: if you do it through your 1040, if you do it through your 941, the government looks through, they say we owe Tori money. They send you a check. It's one of those little rainbow checks that you normally get from the federal government for any other refund. There's no forgiveness, there's no paperwork beyond that, there's nothing else. So Claudia, to answer your question, answering it live, if you're referring to the relief fund for that bonus, absolutely, right? We recommend like a one-time bonus, keep it around 10% just because that's kind of the federal guideline. But like, let's say you want to do monthly 10% bonuses or something, that's fine. In fact, TWC, you know, strongly supports compensating employees well. We know how hard it is for you to do and how much you want to do it. In terms of the FFCRA money, once you receive that check, that's your money, right? So you want to go to Aruba, that's fine. You want to invest it in things for your center, that's fine. You want to give it as a bonus, that's fine. It's cash. Kids were home last year for virtual home learning. You had to work with them too. Do you qualify for this? Absolutely. Yeah, this is exactly, anonymous attendee and everyone out there, this is exactly what it's for, right? The provider I mentioned, it was last week, who's a home-based provider. She had to spend time at home. I don't want to make it sound like it was a chore, right? I mean, like, she had to spend time at home with her kids, right? She had to lose time in her business because her child had to do remote learning. This is exactly what this is for. So, and it's for you individually. And if you have employees where you supported them and you said, gosh, you know, Doris had to be home, I paid her, you know, because I didn't want her to just suffer in this, it was bad enough. Again, we could recoup it. The one thing to remember is you can't do this and the PPP at the same time. So if you got a PPP, you know, we already paid for Doris's time with PPP, we can't double bill it to the federal government. But otherwise, you're good to go. An anonymous attendee, I'd strongly encourage you, reach out to us about this. We can help you with it. Look at the document on the website I'm going to share. Look at the video, right? If you're not done like, wanting to hear my voice. So let's do the last one. I'm only trying to get through it to be respectful of time on your Saturday. And I know there'll be some questions on this one as well. Employee retention tax credit. This is one of the most underutilized, underappreciated stimulus programs out there, and period. And especially in the childcare world, what we've seen is there's been a high rate of adoption. If you're a for-profit and you're one of those higher profit for-profits and you got all the CPAs and everything, you probably are doing this. Most childcare providers don't know about it. Now, this is for if you have W-2 employees. So let me underline that. This is unfortunately only for W-2 employees. If you're a home-based provider and it's just you, unfortunately, it can't be you. But if you have W-2 employee and you're a home-based provider, keep listening, right? This is a really big one. People get freaked out because they hear employee retention tax credit and their eyes glaze over. Don't. Put it aside for a minute as we go through this journey on the ERTC, because this always gets me very excited because it is such a good deal. So if you hear my tail wagging, that's what it is. This is actually easier than the PPP. It's similar to the PPP that it's all payroll based, right? So people say, but what about my taxes? Think about it like the PPP, but easier. And the refund has no constraints. We're going to go through all of this, but this is a really important one. So how do you do it? 3 steps. 1, you self-certify a trigger. So far, we already know it's easier than PPP, right? You're not calling me up and saying, gosh, Gary, which bank should I go to? Which forms do I have, right? Etc. But instead, we're saying you self-certify a trigger. We're going to talk about what the triggers are in a minute, but you self-certify it and you just record that in an old style memo to yourself, right? So it could be an email to yourself. Again, I recommend have a digital version, have a paper version, right? So, if once you do certify that trigger, and again, we're going to talk about what they are, you alert the IRS. Our friend, the 941 is back. This goes, by the way, it started in March 2020. It goes through to the end of this calendar year. So for historical, again, we're doing the 941X, which is our friend, and chances are, remember I said it was payroll based? You're going to go to your payroll company about this. I'm going to talk more about it in a minute. They're going to do this paperwork for you, likely. Chances are 99% of you are not going to do this paperwork, but just ask for it to be done. It goes in, right? You receive a check. Again, rainbow colored IRS refund check. If you notice, I did not say anything about forgiveness. I did not say anything about additional paperwork. So let's talk about the triggers. And I do know we're getting some questions that are relating back to family leave and some other items. I'm going to hit those towards the end, I promise you, but I want to get through this one so you have a coherent picture of it. So 1, first trigger, closure, right? And you kept paying benefits, or you kept paying salary to your W-2 employees, right? So you had to, and all of these, by the way, have to be because of government order. It can be local, state, federal. So your city said you're going to have to close for 3 weeks while we figure out everything with COVID. You kept paying people that would be eligible. 2, this is the hardest part of this entire thing, revenue reduction. So what we want to do is we want to keep in mind that your base year is always 2019, before the world ended. So you're going to want to have your gross revenue, with the exception of your PPP or any loans, those don't count, but your gross revenue per quarter for 2019. You then want to compare it by quarter to 2020 and then 2021. In 2020, if you have a 50% or greater reduction in revenue from 2019 to 2020, you trigger it for the whole quarter. And I'm going to talk to you about what this means monetarily in a minute. 2021, it gets even better because you only have to have a 20% or more reduction in revenue. So let's talk about some numbers. Let's just say, because I like easy math, that in 2019 you made $10,000 a quarter, right? So first in 2020, quarter 2, Doris had $48,000 that she got. Well, that's a 52% reduction. So quarter two is now eligible for the ERTC. Let's say we take quarter one of 2021, she's doing a lot better, right? She made $7,500 that quarter. Well, again, we know going back to 2019, that was $10,000. So that's a 25% reduction. So she's also eligible quarter one, 2021. Once you trigger it, you have to do better than 20% to get it off. So in other words, let's go back to what we said with Doris, that in quarter two, 2020, she had triggered it because she made 52% less than what she made in 2021. Now let's say quarter three, she started doing better. Now in 2019, we know she made 10,000, but let's say she made 7,000 in 2020 quarter three. Well, it's still a 30% reduction. So now she gets to look at quarter four, etc. So we'll keep going until she gets above there. The last one is what they call partial cessation of business. So what this means is that you have had a 10% or greater reduction in your capacity to produce goods or services. And what that, how does that play out, right? So, and you'll see in total or by business unit. So the example the IRS gives is a restaurant. Restaurant has two parts of the operation, a takeout service and a table service. Takeout service in COVID did great, right? Was there a diminishment of their capacity to serve families? Yeah, probably, right? Like people had to wait a little longer. They had to spread out. They couldn't all be in the waiting room, right? People had all the masks, maybe needed more frequent breaks, but was it 10% or more? You really couldn't calculate it. So the IRS would say, this isn't valid for that takeout service, but let's move over to the tables. The tables, you had 10 tables in there and you had to wheel 4 of them out because you had to move the tables and keep them distant. So you went from 10 tables to 6 tables. That's a 40% reduction. An example of how this plays out with the childcare business is, like one that we worked with in New Jersey, where they went from 60 slots pre-COVID to only 40 slots up until recently. That would be a 33% reduction roughly, right? So you can see where this plays out and can be very valuable if you did have to worry about ratios changing. It's not about the number of kids you have. The example of the restaurant with those 6 tables that remain, you never heard me say it's about how many people are seated at the tables or lined up. It's about the capacity. So the government's trying to walk a fine line between helping you when your business was impacted in the way you do business versus maybe changes in consumer behavior where they no longer want to buy your good or service, which is different, right? So the only other thing I would say is can't do this while you're doing Families First leave or when you had PPP money. Now you could do it. Let me caveat that for PPP. It's for the same person. So if let's say Melanie and Tori both work for the same center and Melanie was being paid out of PPP, but Tori wasn't, we can't use the ERTC for Melanie, we can use it for Tori. And you can imagine for some of you with larger operations, there are some ways that we could help you get very tactical about how you would spend this. Real quick before I go into the next point, if you're a nonprofit, how you'll work, I'm assuming you're talking about the ERTC, it's the same for you. The tax credit is technically, if you really want to get into the minutia, coming through your employer Social Security tax account. As long as you have W-2 employees, whether you're for-profit or nonprofit, you have one. So this would work the exact same way. So let me go over how much you get for this real quick, and then I'll go back to all the questions. Or I'll tell you how to get help, then I'll go back to the rest of the questions. So we talked about how you alert the IRS. That's kind of where we left the story. When it came to that point, the question, of course, is, well, how much do I put in there? 2 rules. In 2020, you get half of the first $10,000 a person earned in total during eligible periods, up to $5,000 for the year. So let me explain what that looks like. So earlier we said, Doris's center was good for quarter 2 and quarter 3 of 2020. So let's say Tori during that time made $40,000. Well, You'd get half of the first 10,000, so you'd get 5,000 for the year for Tori. This works, by the way, with part-time employees. So let's say Melanie is a part-time worker. She only made 7,000 during that period, during those 2 quarters. You'd still get 3,500 for her. So this is at the individual level. 2021, it gets crazier. So in 2021, it's 70% of the first 10,000 per quarter. So if we take the same example, right, in let's say quarter 1 and quarter 2, 2021, you qualified. Well, Tori made $40,000, right? It's $20,000 a quarter. Well, quarter 1, you'd get 7,000. Quarter 2, you'd get 7,000. You'd already have gotten 14,000, right? I'm not going to do the math off the 7,000 that Melanie made. You get the idea, because I can't do that right off the top of my head. It does work on part-timers as well. What it does mean is if you trigger for all 4 quarters of 2021, you're talking about potentially $28,000 per employee. This is a big deal. And again, we could do it retroactively. So if you're not eligible anymore, but were in the past, we can help you with it. If you're eligible now, but weren't in the past, we can help you with it. And again, when this money comes back, it's in the form of a check, no forgiveness, nothing else. So let's talk about how to get help, and then we will go into the Q&A. 1, childcare.texas.gov. There's a step-by-step guide for the relief fund there if you want it, and I'll put this under Answer Live. So again, childcare.texas.gov, step-by-step guide. There's links to help for other resources such as ERTC. We have that piece on taxes on there. They're all in English and Spanish. If you have questions, if you want to request coaching, if you need some help, email texas@ecebizcoach.org. Do it in English or Spanish, whichever you prefer. Don't worry about us. We'll wire you to the appropriate person. The other thing you're going to find on childcare.texas.gov is we have live Q&A webinars. They're 5 times a week. Again, English and Spanish. The one thing I would say is, and this is a big scoop. This is, we shared it Thursday, but you guys weren't there. You're on Saturday, so you're getting it 48 hours late. But these Q&A webinars to date have only been on the relief fund because that's been our focus. But starting next week, we're going to have a few on other topics like the ERTC and FFCRA. So if you have more questions and maybe you want to ask it in a group setting or hear it again, this provides you with a great opportunity to do so. So let me hit some of these questions. Explain more about corrective action not being a corrective action. How recent can the corrective action? It really depends case by case. What they're looking for is that May 1 timeframe, you were not on corrective action. However, I'd really want to understand what your timing was like specifically and the nature of it. If I did a PPP and received funds, can I still apply for the relief fund? Absolutely. Again, you can't charge the PPP time to the relief fund. So if Melanie got her salary paid in March out of the relief fund, out of the PPP, she can't then use the salary for the relief fund. Could she do it in January and February? Absolutely, right? If she was done in March, April, May, June, July, and August could all be on the relief fund. Had to work virtual learning for 8 months, caring 2 kids too. If you were, it depends, because in this case, because one of the things I should say about the leave is that you could not work, right? So if you were caring for your 2 kids and also everyone else in your charge, so you were working at the time, you would not qualify for it. Can you replace Prairie Down Fence? Yes. Does this apply when COVID guidelines were in place? CCR didn't adjust permit capacity, but we're able to reduce based off the state guidelines during the front line. So I'm assuming, Vicente, you're talking about the ERTC there. If I am understanding your point, yes. But again, you can email us. We can also talk directly on that if that's helpful. You can talk with a coach on it specifically. Can you use only 2021 for the ERTC? I made less in the first quarter between second quarter. No, unfortunately, you can, okay. So I was about to say, unfortunately, I'll give you the full horror here. So if you were open in 2019, you have to use 2019. However, and this is an important thing for anyone who opened later than that, there's a whole slew of rules on what you do if you opened anywhere after 2019 or even during 2019, but you weren't open the full year. So what I would say is, I don't want to say, no, you can never compare one quarter to one quarter in the same year. Typically, you cannot. But if, let's say, Doris didn't open till the end of 2020, yes, we can look at that. So we'd want to hear those circumstances. But if you're a newer business, unlike the PPP, this is something that could apply to you potentially. Funds from stated yep. There's both the Families First and ERTC. There's no forgiveness. It's a tax rebate essentially. So there's no forgiveness to be done. There's no any of that. By the way, speaking of forgiveness, real quick, one of the things that we're going to be having on that site, I believe it's going to be up there within the next week, is a whole manual to guide you through your forgiveness. So if you haven't done that PPP forgiveness yet for round 2, there'll be some information there and also some coaching that we can provide.
Gary, there are a couple of questions here in the chat box, and one was from Carolyn, who's been patiently waiting. I don't think this has been asked before. Can somebody use funds for advertising purposes? Presumably to help enroll students and children.
I would say under the presumably to, yes.
Okay.
Right, but like, let's make sure it's very much directly related to the childcare business.
And along those lines, Gary, you can confirm that nonprofits are eligible for these and they can be used for bonuses for employees, correct?
Yep. Yeah, absolutely confirmed.
You talked earlier about purchasing vehicles, vans, and there was a question about insurance. Can they use it for insurance for their vehicles, for the van?
Insurance for your vehicles, again, if they're registered to the company, if it's split between personal use, right, then it would be in your reimbursement rate already. But like, let's say Doris's center owns a van and the insurance is in the center's name and everything else, yes. You can also do liability insurance. You could do homeowners insurance if you prorate it. Or if you're a center, you could do your insurance related to your center. So that can be on there as well. The one thing you can't do, which often comes up, is we've had some people who have said, can I include the copay for my insurance for winter storm damage? No, unfortunately not. But current insurance bills, yes.
The more specifics are for, what about a fence, a playground fence? And
fences, yes.
New cell phones?
Yes.
For the business?
Again, yeah, good catch, Tori. Thanks. Tori, help me out there. Make sure it's for the business. If it isn't, that you're doing it in the same way as you reported on your taxes, right? If you're splitting it between personal and professional use.
And an advertising sign?
Yeah, I mean, as long as it's directly related to the business, yes.
Good questions. I know we're running late, so appreciate everyone hanging in there. And Gary, thank you for staying on with us.
Real quick, I'm looking at some of the ones that are in the chat box. It's interesting. Lauren said, I'm a CPA who's prepared several 941s for the ERTC. Last year, it took 10 months or more to receive funding checks. So we're applying the subsequent quarters. You can absolutely do that. There is a little bit more monitoring for the employer. What we found is, you know, and for anyone who wants to pursue the ERTC, we can certainly talk about that. You know, Lauren, what I found was for most providers, it, you know, depending on the situation, it can become more difficult. Most of the third-party payroll providers have stopped doing it because they don't like ADP doesn't do it, Gusto doesn't do it, I don't believe Paychex does anymore either, even if you request it. But it does take some time. Lauren's point is a really good one. What we've been finding is anywhere from 8 to 12 weeks to get those checks, right, after you submit your 941. So definitely do think about, you know, the timing of it. It's not going to be a quick fix, but as you recover, it will be money that will come back to you. We're using gross revenue. That's what we report on the franchise tax report. Yes, that is correct. Employee retention tax code, we're on payroll. Just say we can't be eligible. W-2 employee, yes. Continuing education hours for these webinars. I'll let Melanie answer that one. Melanie, thumbs up, thumbs down. Do you get continuing education?
Defer to Tori on that. Tori, do you know?
I don't know, but we will, I think Sonia asked that question. We will look into that. I don't know, but we will communicate back.
Depends on how informative you thought this was. Just kidding.
I think it's going to count, but we'll check on it.
Use environmental pest control. Yes, again, Angela. Time space allocation. It's if you go to Texas or childcare.texas.gov, go to page 9 of that step-by-step guide. It'll take you through that if you're not familiar with it. But yes, you could use it in those cases. You could also use a lawn service. Amended 2020 tax return, FFCRA. If it's your personal taxes, right? So Sonia, if you're a home-based provider, you will have to amend your 2020 tax return. We can help you with that. It's actually not a really hard thing to do at all. Last one I did took me all of about 15 minutes to do with a provider to talk them through it. And they did it manually. A lot of times, if you're doing online software, it's even easier. We closed during COVID. My lady's got unemployment. Nope, unfortunately, you cannot. Cam, it does have to be your payroll to them, but it's a great question. I want to make it seem like it was dismissive. Regarding CCRF, how would TWC utilize funds not utilized by providers? How would unused monies be applied? That's a great question, and I don't know. That's above my pay grade. I do know they need to use it, in support of the industry, but I don't want to speak on their strategic direction. Can you compare 2020 and 2021 for the ERTC? It does have to be 2019 if you were open in 2019. And this goes back to the answer I gave earlier that if you have permutations where you weren't open in 2019, then it would be different. Anonymous attendee, you gave your email address. I'm not sure what that means. If it's something where you need help, email us at texas@ecebizcoach.org. Did I get everything? I was trying to do the chat. That one's a little harder.
Is that it?
Just out of respect.
Going once?
Yeah. Okay. Give me about 1 minute. I'll go ahead and close. Great questions, everyone. I'm Doris Ramsey with Child Care Associates. And on behalf of our partnering organizations, Early Learning Alliance, Child Care Associates, Child Care Group, the North Texas Early Education Alliance, and your local workforce boards, Dallas, Southeast Texas, Tarrant County, and Heart of Texas, we want to thank you for joining us this morning. You could have been any place on a Saturday morning, but you invested your time in learning more about the resources that are available to actually help your business. We know this past year has been challenging, but the work that you do on a daily basis is vital to the state's recovery efforts. If you were not aware of the resources that are available, and actually Gary has really talked about increasing your revenue pretty quickly, as Gary stated, these are fairly quick wins. Please reach out to his team. Gary, thank you, as always, excellent, very insightful, and I learned something new each time you present. To Tori and Melanie, thank you for your assistance today. So here are our marching orders. Of course, we want to end with that. Number one, if you have not applied for the Relief Fund grant, the applications are due July 31st. Mark that on your calendar. If you are not sure if you are eligible for the fund or any of these resources that Gary discussed today, please reach out to his team at the eBizCoach email address. The support and technical assistance are really just an email away. And last but not least, this is an industry where we spread things by word of mouth. So if you have another business owner that you know that has questions or they're just not sure, tell them to go to the website and look up the information. There is technical assistance. So you guys had some great questions today. There are people that can talk to you and talk about your one-on-one situations. Our hope is that everyone who is eligible does apply. So again, we thank you for taking your time on this Saturday to join us. And with that, we'll go ahead and close.